Where are we in the Bitcoin cycle? A lot of people have different opinions on that. Some people say we are close to a crash. Maybe we are already about to crash. We've already topped. Others say we are going to go to 250, 300K. Banana zones are being discussed. Crazy terms and crazy expectations for prices. Today we want to take a look at a few indicators, on-chain indicators and the Elliott Wave structures, combine them to come to a conclusion. Let's go. Hello and welcome to another video by MCO. My name is Ben. On this channel we normally take a look at price charts from an Elliott Wave point of view. We do that today as well, but on this channel we also do a deep dive typically into price charts. We take a look at on-chain indicators as well, which we are doing today as well. In the last video about Bitcoin, I presented you with an indicator that is a very reliable buy signal. I will show you one today as well. Might be useful for the next larger correction, might be useful for the next crash or bear market, but it might not even need a bear market for that. We will talk about that today. I will show you this one indicator that's really been a really good indicator to predict a substantial low. We will take a look at a few indicators to understand, are we actually in an overheated market? Have we topped already? Some of these indicators have, in a very reliable way, predicted previous cycle tops. So we will do all of that. Take a look at where we are in this cycle from an on-chain point of view, kind of. Market sentiment, maybe rather market sentiment point of view. And then we will relate that to our Elliott Wave structure, which is also an analysis method based on market sentiment, but it is more focused on price action, more on the now, whereas these other indicators I'm showing you, they are more focused on the past because they have been built based on data from the past. Whereas, and that's a big misunderstanding, Elliott Wave is not focused on the past data like many other technical analysis methods are. Elliott Wave is always focused on the present. It gives us an indication of where we are right now. Are we in an uptrend? Are we in a downtrend? Right now, are we holding above support? Are we below support? And that is a focus on the present, which very much is in line with my philosophy about work, life, and so on, which I covered in my last video, video from 2 days ago, where I talked about 11 success factors. Okay, let's take a look at charts. I don't want to waste time here today. I never waste time. No, that's not true. That's not true. Bold statement, but that's not true. No, but we try to avoid any time wasting here. So let's go straight to the charts. Fear and Greed Index. You might know about that. It shows us different areas of market sentiment. It is most useful if we are in an area of extreme values. Yeah, very extreme values. I'll try to zoom out a bit. Like when we are in extreme fear, like we were in 2024. Good indicator to buy a bottom that was in August, I believe, September, August, July 2024. Very good. It caught the low there and we're rallying higher. Now, it's not so good if you need to be able to interpret this chart. You can't just buy this when we are, you can't just say we are in extreme greed, which indicates we could be close to a top, without understanding the Elliott waves. I think many people interpret this the wrong way. You need to understand the Elliott waves. And is the sentiment we see that this indicator shows actually what we also expect based on the price chart? If we are in a third wave rally, which is typically the most aggressive rally from an Elliott Wave point of view, and this shows extreme greed, yeah, that's what we want, okay? So I'm not selling into a rally like that. I might sell into the divergence, which means, oh, sentiment is already going down based on this indicator, price is still going up. It might be time to sell or think about a top. I don't want to buy extreme fear when Elliott Wave tells me that we've just started a bear market. That doesn't make much sense because I would be buying all the way down here and it would be potentially dangerous. I would just buy the dip, buy the dip, buy the dip. Or many people tell you buy the dip, just buy the dip. And eventually you don't have any money left for buying the dip because you've bought all the dips and there's still another one. So you need to interpret this together with the Elliott waves, I believe, because Elliott wave tells us the truth, the now. This indicator can be an interesting one to look at in addition. So for example, if I know that based on Elliott wave, we are above support, we should see more upside, we're currently in a pullback, then it could be an additional confirmation if we're currently in a correction, in a pullback, in a bull market, and this shows extreme fear. It might be a buy. Yeah, but if Elliott Wave tells me is we are in an impulse to the downside and we are heading into a bear market, yeah, I don't want to buy into the third wave to the downside, which is an aggressive downtrend. Okay, so however, what does it show us right now? Well, we are currently kind of in the neutral zone. That makes this indicator at the moment not so useful. I'm with divergences. I mean, look at the white line, which is the uptrend price. Yeah, but we saw divergences end of November. Sentiment was going down, and since then we've just been kind of correcting. Yeah, no crash yet, but it's kind of been correcting. What is important, I believe, is to understand we are not in an extreme greed zone, so it's not overheated, even though we are close to all-time highs. So that indicates to me that we're not in an overheated market. We're kind of in a market where the market is a bit in a state of uncertainty. And again, Elliott Wave tells us that as well. So what I want to show you is how to use this indicator. I explained that, and I want to make sure that it's clear that it doesn't confirm a top for us. Okay, it's not overheated. I don't see any divergences at the moment. Yeah, because the indicator is doing what the price is doing. Basically, it's kind of going sideways down now. It was, in my opinion, a clear divergence when price was still moving up and the sentiment was going down. That's potentially dangerous. Don't see that at the moment. I see rather a decline here overall and a decline in price slowly. So waiting here for more extreme readings. Looking at the next one, which is the Puel multiple. I don't know if you see the green. I don't see it very well on my screen, but there's a green area and there's a red area, and the white line is the price and orange is the Puel multiple. And I try to keep it very simple. The Puel multiple is a metric that tells us how high the miner revenues, Bitcoin miner revenues are compared to a historical average over a year. Okay, so the idea behind it is that if the miner revenues, which means the daily, how many BTCs per day are being issued in USD, yeah, if they are very high, then the miners will sell at some point a lot to cover their costs and make profit. So if we are not in an overheated environment, then there is not so much selling pressure by the miners. So you see that here we are not in the red zone. The red zone would indicate kind of overheated. The red zone would indicate we might be close to a top. We're not. However, I promised you a buy indicator. I mean, honestly, this has really been interesting. Whenever it hit here the green zone, it was a really good buy. Okay, so I intend to use that in the future as well. While I believe the tops are getting a little bit, I mean, muted. Yeah, it's not, you don't see these clear spikes anymore, and that might be because of the halvings. And then kind of, yeah, again, the Elliott Wave structure we're in, it's not that overheated environment overall, because we're not in a third wave based on Elliott Wave, which I'll show you at the end. No, we're in a fifth wave, so the environment isn't that overheated, it's not that euphoric, we don't see these extreme price rallies, so we don't see those spikes, there is not that extreme selling pressure, whereas if we get a large correction, there could be there could be even less selling pressure, because that's typically where there is a buy area. Why? Because typically when the value of newly issued BTCs is below their cost, a lot of these miners will close their doors. And then even less players will be inclined to sell. So that's sort of the idea behind it. Yeah, but for now, also here we don't have an overheated reading. We might never get back into the red zone. We have to keep that in mind. So this might be rather an indicator used for buying rather than selling, for sell decisions. However, I can tell you that if it gets into the red region, it will be a signal that we are close to a top, but we don't have a signal for a top here either, indicating further upside is possible. Same was the Fear and Greed Index. Next indicator, Pi Cycle Top indicator. A lot of you in one of the last videos I asked, should I do it? Should I take a look at the Pi Cycle Top indicator? You wanted me to do that. It is an indicator that historically has predicted price tops very accurately. We have to take it with a grain of salt, because just because this indicator doesn't flag a top, it doesn't mean that there isn't a top. Okay, it's just when it shows a signal, be ready. Doesn't mean just because there is no signal, the market has to go higher. So there is no signal yet. So at least we can say that. So we have to focus more on the Elliott Wave structures, which will tell us where the price is now. Are we above support, below support, bullish structure, bearish structure? But I think you wanted to talk about it a little bit. So this is one where we have two moving averages, the 111-day moving average here in blue or green, blue, green, teal, and the purple one is the 350-day moving average multiplied by 2. And then when the smaller time frame 1 crosses above the upper or the higher time frame 1, so when the 111-day moving average crosses above the 350-day moving average, which happens typically around these tops, it just indicates that the market is overheated. Right? It indicates the price is going up so fast that the shorter time frame moving average is going up fast with it, but the slow one, like a massive ship, you can imagine it, visualize it, this purple one, it takes a long time to adjust. Whereas the small one is like a speedboat and it's running with the price. And therefore, when it hits these overheated phases, it indicates a top. It indicated a top here in 2021. That was in April 2021, very close to the top. I think it was just a few days after, or a week or so. We had a top signal in was it here? No, it was here. It was here when it crossed just at the top. I mean, this was accurate in December 2017. Yeah, when the green one goes above the purple one. That's the signal. And then also it crossed here in 2013, but I don't think it existed back then. So it was kind of made up based on historic data. So it doesn't mean, again, just because something happened in the past, it doesn't mean it has to happen again, but it's something to watch for. But it also doesn't mean that we have to feel safe, right? Just because it hasn't flagged a signal. I mean, maybe this isn't going to work anymore. It worked so many times. Everybody's watching this signal. The market will never give the majority of participants the advantage. Keep that in mind. Now the next one is the balance on exchanges. Interesting because while historically when the price went up and moved in bull markets, the balance on exchanges increased. Yeah, this is different this time. So why would the balance on exchanges increase when the prices are going up? Because people prepare to sell, or institutions. This is different this time. The price is going up, but the balance on exchanges is going down, 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 down. That could mean different things. People don't trust the exchanges so much as in the past. I mean, we had FTX, a scandal. That might be one reason why they rather keep it on hardware wallets. Another reason might be the ETFs. I showed you in the last video that the ETF inflows are still going up. We still have more inflows than outflows overall. So that is also where these BTCs might go. So we need to observe the ETF inflows and outflows as well. But I only did that in the last video. I'm not going to do that today. But yeah, so that might be an explanation, but it also means that there is not yet the preparation necessarily for a massive sell initiative. Okay, so that's also not yet indicating a major price top. So I would say let's take a look at the Bitcoin chart then. Let's take a look here at the daily time frame. For anybody who doesn't know our Elliott Wave count on the daily chart, well, it still allows for further upside. Yeah, we want to focus here on the present. I've been very cautious about the Bitcoin chart for the last couple of months. I've been highlighting, I've been warning, I've made videos about that we are probably close to a top. I do not expect a so-called banana zone. I just don't. Doesn't mean that it could happen. It certainly can happen. We can get an aggressive rally. I can even see in my wave count an extension to the upside to possibly $190,000. That would not be necessarily unusual. I do not primarily expect that, but I can see it maybe go into the area around 130 to 145K. This would be ideal. On the larger time frame, the minimum expectations for this rally are fulfilled, but one more higher high would be ideal. And then, yeah, from here, I would expect a major top. Whether that means we're going into a really large correction or it's just another 4-5 pattern, which would be an alternative scenario, remains to be seen. But either way, this would be a massive correction, even in a wave 4, which gets another high in wave 5. So I will always give you the relevant support levels. At the moment, the main support area is between 69K and 91K. That means it takes a break below 61K to confirm a major top. Yeah, first confirmation, because this wave 4 could stretch out all the way to that level. And it's not even an invalidation point. But to be honest, looking at proportions, once the price goes below 75K, I think we probably have topped. I don't want it to go below 75K. Don't want it to go below that March 24 high. That would be my first signal that we've topped. Until then, I have to give it that space, which means the risk is quite high on the macro level. And I've been highlighting that really, really thoroughly. I've made videos about how to take profits, why the risk is high at the moment. On the smaller time frame, you can set tight stops, but on the larger time frame, we are in a larger topping area. I still expect another high, but I'm not, most of this rally is done. So I'm talking here about the last bit. I would not be surprised at all if we drop early. On the larger time frame, though, it shows you here clearly that we are in this long-term top zone. So I encourage everybody just to, I'm not telling anybody to buy or sell. Yeah, I'm not telling anybody to take profits. I encourage everybody to think about their own portfolio, understand where we are based on their structure, understand the risk. And okay, you could say we haven't seen any top signal, any of these indicators. Just because these indicators are not flagging a top, doesn't mean we couldn't top. Doesn't mean we couldn't move down to 50K or something. Yeah, because essentially it's about understanding where we are in the cycle, and the risk is high. The trend is still up. I still expect higher prices. If we were in this top zone and those indicators would all flash sell signals, yeah, warning, well, that would be, I would be warning even more. I'm not doing that. The trend is still up. I'm still looking at higher prices in the short term, while from a macro bird's eye view, we're pretty much close to a top. And the process of topping is often more like it's more a process. Yeah, it's more a process, because what sometimes happens is that they just consolidate. The price just can't get above certain levels, like 100K on a sustained basis. Everybody who has a position everybody who wants a position has a position. So if nobody buys anymore, prices will start to drop at some point, and then at some point you get this kind of panic reaction. And so I have to warn. I expect also the correction to be fast. I expect it to be a crash that will catch a lot of people off guard. Hopefully nobody who's been watching these videos here, because again, you should be prepared. You don't want to be the panic seller in that correction. You want to be the buyer, I think. I will be the buyer. So this is a more bearish scenario here. So if we really topped, maybe after the next high, yeah, then this move down, and this is kind of a long-term view. If this move down happens, I expect it to be fast, because the move up from the August 24 low is an ending diagonal, which can lead to a very, very sharp drop afterwards. That's just what they do. And I expect this to be an A wave. And I told you about, in one of the last videos, about an indicator, the RSI, which has flagged very reliable buy signals in past corrections. I will use this to buy. I will also probably use the Puel multiple, as I showed you, to buy. And then we'll trade the B wave. Now, if I see in the rally it's getting slow, it might be time to sell. If it continues to move up in an explosive way, I will probably hold on to positions, and I will show you in a minute why. But overall, the idea would be that there's a high risk of another drop, and it could be a multi-year bear market or correction. Is it a crypto winter? Is it a bear market? This one would be, but I'm not telling you it will happen. This is one scenario, and it gives us a clear technical answer. I believe the technical answer would be to buy the A wave. The other scenario is more bullish. It would also indicate that we are close to this top, but the correction here would be a wave 2, which would lead to another rally in a third wave, and so on to 300K plus. This might be what some people call the banana zone and the super cycle, and this could take us to 300K, 500K, 600K, also probably rather long term, but this would be what most people refer to as super cycle. I wouldn't rely on it, but exactly because of that, I will buy here, because it's a no-brainer in my opinion. In both of these scenarios, the dip afterwards should be substantial, the rally afterwards should be substantial, and if the rally, and it's all about staying in the present, if the rally tells me it's impulsive, I will rather hold on to the positions that I bought. If the rally is corrective, slow, I might take some partial profits and then get stopped out on the remaining positions if the price indeed comes down. Yeah. So there will be a tactical answer to all of that. When we see that move up, we will talk about that. But for now, I prepare for a drop into this area. This is an estimate at the moment. I could see it go to 30, 40K. So we'll see how that all works out. But even this, I mean, would you call that a bear market? It could take a year. It might take a year. The move up took a couple of years, 2.5 years. Yeah. And then the move down is 3 waves, not 5. The move up was 5. Move down is 3. Might take a year. Yeah. Again, do you call that a bear market? Some people might do. I don't like these terms. It will be a correction, essentially. So yeah, this tells you what I plan to do. It also, I think, in terms of conclusion, we haven't got a top yet, or at least it's not clear at this stage. We are in a high risk area from a macro point of view. I don't think we've topped yet. I have no evidence at all that we've topped. It's just that the risk is high. So that means we're not bearish, but we're not that bullish anymore. Okay, we're just cautious. That's different. That's not bearish. So we're cautious. On the smaller time frame, I'm still tracking higher prices. And I would like to see at least one more rally to 130K, but it wouldn't surprise me if we've topped already. Now, I didn't tell you that last year in, I don't know, in March. Yeah, we expected still further upside after that. I still expected further upside here in the middle of the third wave. Even here, we were watching for still further upside. But now we are in like a long-term target area that I've prepared everybody for the last 2 to 3 years. So we're arriving at the train station, but as I said, topping is a process, whereas bottoming is often an event that can happen very quickly. There can be that one event like FTX, FTX collapse marked pretty much the Bitcoin bottom in 22, whereas this might be more of a process. Yeah. So that's how I see it at the moment. Let me know if you are interested in further of these indicator videos. I always try to present new indicators so we can build that let's say knowledge base and bigger picture together as community. It's all about being a community here. Essentially, MCO is a worldwide network of traders, Elliott Wave enthusiasts, and investors as well, crypto fans, and so on. So it's all about building that knowledge together. So suggest what you want to see as topics for future videos. That can be very helpful. Essentially, this is a channel for you. It's a channel to connect and bring people together. Make sure you subscribe, hit the like button as well. Thank you very much. Bye-bye.